Welcome back to Family Investment. My name is Alex Cho. I will be speaking about the buy trigger for 4 mega cap stocks today. Facebook, Microsoft, CRM, Salesforce, and Google. With the month of September on the sell-off on the tech stock, is it time to buy or is it time to let go, sell? So stick with me on this video. I'm going to share with you my key information, my research to supplement your research to decide what move you've been making. So in this video, I'll be showing really quick, simple 3 steps. I'll be speaking about the fundamentals, the valuation of the company, and eventually I'm going to speak about the technical analysis. This is where I break down using the Fibonacci retracement tool to see if it's a good time to buy or just wait a bit more, or perhaps it's time to sell for it to go lower. So 3 simple steps. But before we get into it, please remember to like and subscribe my channel so you get this awesome video every time to help you. Let's kick off with the fundamentals. And the first one I'm going to start off is with Microsoft. Oh wait, before we get into the details, this video is sponsored by stockcard.io. I will be using this tool. I use it on my personal basis. I'm going to show you how to break down the fundamentals and simplify for your simplicity. So let's go onto the dashboard for Microsoft. What is Microsoft's fundamentals like? So high growth potential, no doubt about it. Strong operation, yes. And remember, they've lost TikTok, but they still have the Jedi government contract, which they won over Amazon. And do you know, with the Jedi Amazon contract, they potentially go to other governments supplying the same services. So Jedi government contract is basically trying to cloud all your government information, encrypted the details so that you can work from everywhere, information free flowing, but also with great encrypted security. And Microsoft is the one that the US government has entrusted. And do you also know about Microsoft? Microsoft is my favorite. It's so resilient. I've spoken about it in my previous video, but it's so resilient. COVID or no COVID, Microsoft's got everything from cybersecurity to cloud computing to gaming to supplying working from home. And Microsoft outperforms the market in terms of the cloud, the gaming. They may not be number 1, but they're always chasing for the number 1, number 2 spot. Outperform the market, no doubt about it. And finally, it's gone down to fair share price. A stock price of 200, fair share price. But let me save that for the valuation part, okay? So now for the next one, let's talk about Facebook. So Facebook has a bit of a drama in the last 2 years with this banning them, Kim Kardashian banning them for 1 day in Instagram, and they've got all the companies boycotting them. So it's a fair growth potential. Yes, the growth has slowed down this year and last year because so much money has been put in to try to deal with the privacy and security. You know, money has not been focused on growth, but money has been focusing on these 2 key aspects. Strong operations still. People are working from home now and they've cut costs without offices. Outperforms the market. Still the best social media platform. Making money out of thin air. Profit margin is so cheap. They sell nothing but ads. There's no cost. Cost on people, but it's so cheap. Fair share price. Now it's dropped to fair share price because of the sell-off. But is it fair until I do the valuation? Next one, number 3. Let's talk about Google. We love Google, we use YouTube everywhere. But what's happening with Google? Is it time to get Google? Fair growth potential. Yes, it's a genuine concern. So for first time in so many years, 2 decades, Google has actually slowed down on growth. It's got negative growth. It's something that we need to pay attention to. Strong operation, no doubt about it. Same return as the market. Yes, in terms of the ads, in terms of the cloud computing, they're actually behind the leaders. They're no longer the leaders. Fair share price is something I would like to speak a bit more detail in the valuation because it will shock you. Seriously. And next one, the youngest of the lot, Salesforce, CRM. We love cloud computing. This is the leader that's out there. King of cloud kings out there dominating with the e-commerce growth over the COVID-19. So on our stockcard.io chart here, fair growth potential. think it's starting to slow down on the growth. That's why it pops out. But it doesn't mean that it's slowing down. It's still growing, but it's not as growing as when it was back in 2017, 18. Strong operation, no doubt about it. There's still new products going on. Einstein, the new products coming up, outperform the market. They're still the best for CRM, Salesforce, helping customers with new Shopify that's coming out, Etsy, all these guys, they're helping them out. Fair share price, despite the jump from 220 to 242, it still calls it a fair share price. Why? I will show you in the valuation after this. Now let's get back to the valuation. Microsoft's valuation here. And here we go. The last earnings has done really well. They broke the earnings. They forecast a new 1.54 they're expecting to beat. So if you add the last 4 quarters, meaning the one in future, the current one, and the last 2, we will get 5.91 on the EPS. If you put a growth of 10% growth, the share price should be worth $247. 10%. But Microsoft is still growing. It's got Xbox coming up. It's got cloud computing. If you put a 12%, the growth should be about $281 a share. Wow! And as according to Yahoo analysis, it should be a 15% growth for the next coming year with what's coming in with all the contracts. It should be worth $333. So Microsoft is undervalued. In terms of Graham's intrinsic calculator, Microsoft is undervalued. It's got growth behind it. It's got momentum behind it. So why are people not buying? For Facebook, so what's Facebook's valuation here using Graham's intrinsic calculator? So if I add the last 4 EPS, 7.95, that's the value I've got with the next quarter forecast, future forecast. So let's begin with growth of 10%. That 10%, they're worth 332 with the current EPS, guys. I am not joking, 332. That's almost $100 above where it is now. But if you think 15% is more viable, I believe there's still 15% growth every year for Facebook. If you're talking 15% at the current EPS of 7.95, you're talking 448. 448. Do you hear that? That's almost double where we are just now. That's because Facebook is really severely undervalued for a company of its status. This is just very unfortunate. Mark Zuckerberg is always the villain in the Wall Street, not Elon Musk no more. Now for Google's valuation. And if you use Graham's intrinsic calculator, if you look at the EPS, Google has got one of the highest EPS. If you add them all together on this chart here, it's 46.53. 46.53, not 46.53. It's amazing. The sales revenue that comes from Google is huge, but it's only the growth that's scary. The growth, I've left it at 5%, but if you see, I think we might be on the decline for Google. But if you think that's still 5% growth, it's and all EPS add-in, it's 1,262. That's how much it costs. So it's quite close to where it is, but maybe $200 more. But if you believe there's still 10% growth, it's about 1,945. So if you go in between like 7%, so at the moment it's roughly around about 7%. But it's just the last earnings was really concerning, that it shows a decline. So I don't know where Google is going to find areas for growth. What? For Salesforce valuation, the last EPS, all add together the current future one, 3.64. Okay, 3.64 is the magic number for the EPS. And with a growth of 20%, it is worth 258. Okay, 258. So at a point just now, all the Wall Street traders are expecting a 20% growth minimum. With their new products that's coming in, with their low cost, their cutting costs, it should go up 312. And now for the technical analysis for Microsoft. So bring up the chart here. On the chart here, Microsoft is sitting about $200 a share just now. But if you look, there's a huge, strong support line. Now at 200, it's a huge buying opportunity for Microsoft. It broke through above the ceiling and it's back down again. So if you want to own a piece of Microsoft, this is the time to buy. And even if you buy and if they drop further for whatever bizarre reason, the next buying point, it should be sitting at $190 a share. If that fails, if it goes for the 181, so 180, 190, 200 is a great place to buy in. Microsoft is something that you have to top up every now and then. And guess what? They pay dividends as well. And out of the 4, this is my favorite one, like I said. Right, now for Facebook's technical indicator. It's gone up as high as 300, but it's now broken down. It's dropping like a carrot, and it's on its way down to 240. So if you want to buy Facebook, such a volatility stock with the media, just wait it for 242. Just wait for 242, and a huge support at 242, about 240 bucks, a huge support line. And then the next one down is about 223, but I doubt you'll go that low because it's already broken quite severely low. And it shows on the stochastic, it's just below 20. It's just screaming to be bought, but it looks like there might be room for further drop. Now for the next one, now with Alphabet's or Google's. It's been broken, high peak of 171, and it dropped as low as 155. You've broken that line. And now it's going on the support line of 145. If you believe that there's still growth for Google, you should buy it. But remember, Google is already declining growth, and there's no any way I can see how Google is trying to turn this around. And potentially it could be floating in the region of 137 and 145. That's what it's been doing for the last few years. Anyway, the 137 and 145 is just floating, bobbing its head around the region for a long time. They don't pay dividends. So last one, Salesforce. So is Salesforce worth it? On the technical chart, there's a big gap between 220 and 240 because of the promotion to the Dow Jones. But then they're sitting at that line of 245. And remember, that line is still fresh. It's fresh. Some of us paint the fence. Oh, 242 should be the support line. We still don't know. But with Cloud King, when they fall, they do fall hard. So if you want to buy this Cloud King, they look like the okay value, but buy it when it's cheap. Buy it when there's a discount. So I would just call this. If it drops at 203, then get it. If you miss the train, then fine. Go buy something else like Adobe, like VMware. There's still great qualities, others Cloud Kings. There's so many Cloud Kings out there just now, like Snowflakes and all. So if you miss this train, just wait for it, the right time to get. So put on your alert 203. If it drops below that, then you should consider looking at Salesforce. But by the time that reaches, I'm sure other cloud companies are also falling. So this is what I think about Salesforce, and you make up your own mind. That's the end of my presentation for the fundamentals, valuation, and technical analysis for this 4 mega cap stocks. I hope you find it useful, and please click like and subscribe to support my channels, and hope to see you in future. Please leave a comment below if you've got other videos that you want me to do, or any other companies that you would like me to cover. But please do check my playlist because I've covered a lot of the most popular stocks that you can think of.
Alright, before I say goodbye, please do like and subscribe on my YouTube channel, follow me on Facebook, and if you want, support me on Patreon as well, so I can produce content like this every single day for you guys, to give you guys value. So please do share, share this video to help us grow our YouTube channel, yeah? Yeah. Alright guys, 3, 2, 1, bye bye.